Okay, it's our lecture 10. We will continue from previous lecture 9. We couldn't explain about the minimum tax issue in previous class. First of all, let me give you an idea that how minimum tax works. So it implies that if you have say some regular tax calculation, say for the first 300,000 tax rate is 0%, for next 100,000 tax rate is 5%, then it continues. Can you recall that slab? Okay, so that is kind of regular assessment. So from that regular assessment, say you have 50,000 taka taxes, but there may be some income in your income particulars on which minimum tax is applicable. So minimum tax in certain cases is applied based on some specific percentage. In some cases, it's mentioned that the TDS percentage which is deducted when the income is provided to the assessee, that will be the minimum tax. Or say in case of company, based on their company assessee, based on their gross proceeds or based on their net sales revenue, say for cigarette manufacturing company, they have a minimum tax requirement that their payable tax in a particular year for a particular year cannot go below than the 3% of the gross proceeds. So say based on their regular assessment, can you recall the 45% tax rate for the cigarette manufacturing company?
Yes, sir.
I mentioned in earlier class. Okay. So say based on the 45% calculations, it's a very simple case. The tax has become say 4.5 million. But based on the gross proceeds, of the cigarette manufacturing company, the 3% of their gross proceed is say 5 million. But based on the regular assessment, how much tax is coming, how much tax is computed? Only 4.5 million. But it has been mentioned that their minimum tax should be 3% of their gross proceeds. So between 4.5 million, which is computed based on the regular calculation, and 5 million, which is based on the minimum tax calculation, 3% of the gross proceeds, which one is greater? 5 million is greater. So is it a very natural thinking that which amount will be liked by the tax authority to be paid by the assessee? 4.5 million or 5 million?
5 million.
5 million. Okay. So the thing is that if the regular tax and the minimum tax are compared and minimum tax is higher than the tax computed using the regular tax assessment, in that case minimum tax is to be paid. Minimum tax is to be the final tax liability. Okay. However, if the thing is just like in this way, say regular tax is 14.5 million, but minimum tax is 5 million. In that case, which one is to be paid? The tax calculated based
14.5
on the
million.
based on the regular assessment. So this is the say what should I say, that this is a process how minimum tax works. So when your regular tax is greater than the minimum tax payable, in that case, obviously your regular tax should be paid. However, if your regular tax assessment is less than the minimum tax, in that case, minimum tax should be payable. Okay. Can you recall I showed you that is not related to this. It is kind of related to the overall assessment of individual assessee, that I mentioned that for Dhaka North and South, then Chattogram City Corporation, and for this city corporation, there will be minimum tax of 5,000. Can you recall?
Yes, sir.
Okay. So the issue is related to that assessment also, but here we are not mentioning the minimum tax in case of return. Rather, we will try to explain the minimum tax for the specific particular of income. So say uh, in case of uh, your interest on savings instrument, there's a minimum tax of 10%. Then you already have seen it. Uh, uh, all of this kind of income on which minimum tax is applicable have been mentioned in the section 52 with different point. Say in case of you see the 52, it is I have opened the income tax ordinance 1991. Okay, so these particulars have been explained here. Let me open one for you. That is say 52 52C. I mentioned about it in previous class, compensation against acquisition of property. Compensation against acquisition of property.
Yes, sir.
Yes, sir.
Okay. So this is the way how TDS is charged, but the thing is that it has been mentioned in section 82C that there are some income on which minimum tax will be applicable. Say you see 82C minimum tax.
Yes, sir.
Okay, I have opened a list. It has been mentioned in detail that which income are subject to the minimum tax. Okay. So first of all, let me give you an example from the company assessment. Say, manufacturer of cigarette, bidi, chewing tobacco, smokeless tobacco, or any other tobacco products. What is the rate of minimum tax for them? 1% of
1%
gross
gross
receipts.
receipts.
In case of mobile phone operator companies, their tax is at least 2% of their gross receipt. Have you seen it? Okay. Then in any other cases, 0.6% of the gross receipt is the minimum tax. Okay. So, okay, that is how minimum tax works for company assessee. Now, let me show you another particular for say has been mentioned the tax referred to in clause A shall be the tax deducted or collected under section. Let me explain it for you. That what has been mentioned in clause A, any tax deducted or collected at source. We already have learned about it in previous class regarding the tax deducted at source. Okay, TDS. Any TDS under the provisions of section mentioned in clause B shall be the minimum tax on income from the source or sources for which tax has been deducted or collected. So I just have showed to you that 52D for the interest on savings instrument, and 52C has been, it is mentioned about the compensation against the acquisition of property has been mentioned here. Okay. Regarding the TDS is applicable on the compensation against the compensation against the acquisition of property. Okay. So it has been mentioned that, or it has been explained here that the TDS which we are charging in this section, that TDS amount will be the minimum tax. That TDS amount will be the minimum tax. That is the summary understanding of the this explanation. Okay, so other details are here, and other examples, but I like to I like to show you some notes which you need to be careful regarding the calculation of minimum tax. Is that, first of all, uh, when you have calculated minimum tax, or you have some income on which minimum tax is applicable, and you know that what is the amount of that minimum tax, and that amount of minimum tax will not be refunded to you. So how the refund issue has come, sometimes we pay taxes more than what we need to pay. So in that case, there is an issue of refund. So it is very clear that when the minimum tax has been mentioned and you already have paid the minimum, there is no issue of giving you the refund. So it is kind of superficial explanation. So not shall be adjusted, that minimum tax you cannot also adjust it against any refund due for earlier year or years of refund due for the assessment year from any source. Okay. Let me give you a very simple example in this way. Say, based on my assessment from previous assessment year, I have uh, 30,000 taka tax refund to be received by me. So usually tax refund is not such thing that tax authority will make you the cash refund. Tax refund is not the such thing. Okay. So what is usually done, or what is the way of getting this refund? Say, right now you are in this particular assessment year, say 2019-20. So you have calculated your tax liability, say it is 40,000. So the way of how tax refund works, that you have calculated 40,000 tax liability for this year, and you want to adjust the refund to be received by you against the tax liability for this year. In that case, what is the net tax liability for this year to be paid? 10,000.
10,000.
Okay. So the thing what has been mentioned in the clause I just have showed to you is that, say, out of this 40,000 tax liability, what you have calculated right now, out of this 40,000, there are 10,000. Oh, okay, let me take a very small figure, say 5,000 amount, which has been calculated based on the minimum tax. That 5,000 is minimum tax for a particular income. Say that is the income you have received for tax in tax which has been charged based on the income you have received as a compensation against the property which has been acquired by the government from you. So in that case, uh, you cannot say this 5,000. So you have to make it separate, and you cannot include this calculation here. Okay. So in that case, what amount you need to write? You need to write here 35,000, because it is the amount based on against which you can charge the refund, or you can adjust the refund. So you will charge this 30,000, and then how much is here? 5,000, and now you can add here 5,000. In that case, it is 10,000. So that means the amount of minimum tax cannot be taken in the calculation of adjustment of refund. Okay, so I'll provide you another example that how it works, or how minimum tax is calculated. So that is the way that I like to give you an example from the text. If you have text, you can also follow from the ICAB text, page 240. So then I will explain the remaining notes to be understood in relation to the minimum tax. Okay. Say Mr. B is an assessee. Mr. B is an assessee, and he has a brokerage house, and it has been mentioned that as a brokerage house owner, if you receive commission from providing the brokerage services to your client, you need to provide TDS against your income, and that TDS will be the minimum tax. Remember that TDS is not the final tax. That TDS is the minimum tax. But in case of income from interest on securities, in savings certificate particular, it has been mentioned that the 10% TDS, which is charged on the income from savings certificate, that is the final tax liability. That means you don't need to calculate further tax on that income. But here we are not giving that example. We are giving example where it has been mentioned that it is only the minimum tax. Regular tax may be greater than this, and it is not the final, like the savings certificate interest income. Okay, so TDS is applicable on the brokerage commission he is receiving from his clients. Okay, but in addition to his income as a from brokerage commission, which is amounting to income from brokerage commission, he has around kind of 1 million income. He has 1 million income. Okay. And against this brokerage commission income, he has already paid tax deducted at source amounting taka 50,000. Okay. But in addition to income from brokerage commission, he has some other income which has been mentioned, that he has income from house property, which is amounting to 50,000. And he has also income from other businesses, say 205,000. So note that this income are taxable income. This income are taxable income. This income are not income on which still some exemptions are available, on which some reduced income are available, reduced tax rates available, in not that kind of income. So you can recognize that income from salary is, say, in your income from salary, if you have 10 million income, after giving allocation for exemption, because there are some exemptions available, you may have only taxable income from salary set at 8 million. So I'm trying to relate that here it is, these are also taxable income, like this 8 million from income from salary. It's not the 10 million. Okay, it is the final taxable income. Okay, so the thing is that when you will be providing the income particulars and some income are kind of on those income TDS, sorry, minimum tax is applicable, you need to separate that income for tax calculation, and you need to separate other income on which minimum tax is not applicable. Okay, so let me give you another example that is related to house property, but we do not have information right now here about this. So can you recall I mentioned that there is a TDS applicable in income from house property? Uh, was it for residential property, house property, or for commercial house property?
So commercial.
Commercial house property.
Okay, okay, okay. So, uh, so that is also thing here that from your income from house property also there is also the area of uh, charging the minimum tax. Let me give you the ref. If you try to see the list, the 82C, what I just have showed to you, 82C, you will try to explore that the house property income is listed here or not. Okay, then you will be able to connect that the TDS which is charged in income from house property, also the minimum tax for the house property income. Okay, so let's continue what we are uh, mentioning here. Okay, we have to separate the income on which minimum tax is applicable. Okay, so we have separated it out. Which one? Income from brokerage commission. Why? Because minimum tax is applicable on this kind of income. So this is in the list of 82C. 82C. In this way, if I like to give you the reference, it is on the section number 53 triple B. The the stock exchange is the entity, or the brokerage houses are the owners of stock exchanges. This one,
Yes, sir.
53. Yeah. Brokers form the stock exchanges, and it has been mentioned here 53 triple B. And if you like to see the detail for 53 triple B, as 53 triple B is under the 82C, that means the minimum tax is that amount which has been mentioned in the 53 triple B. Okay, 53 triple B, collection of tax from member of stock exchanges. Brokers are members of stock exchanges, and this is the details about them. Okay, the chief executive officer of a stock exchange, who will be responsible for this TDS? Chief
Chief
executive
executive
officer
officer.
of a stock exchange shall collect tax at the rate of 0.05% on the value of shares and mutual funds transacted by a member. Who is the member Investors are not the member. Who are the member?
Brokerage.
Brokers are the member. Yeah, a member of a stock exchange, and at the rate of 10% on the commission received or receivable by a member of a stock exchange for the transaction of securities other than shares and mutual funds at the time of making payment for such transactions. So in case of shares and mutual fund, the rate is 0.05%. And in case of other than shares and mutual fund, the rate is 10%. Okay, so let's continue. Okay, so the thing is like that. We have separated it out. Okay, first of all, let's make some regular calculation. Okay, so how much a regular income on which minimum tax is not applicable? It is 455,000. Okay, for Mr. B. Let's assume that Mr. B is not a company. Mr. B is an individual. Okay, Mr. B is an individual. Okay, so for the first 300,000 taka for Mr. B's income, how much is tax rate?
0%.
In that case, tax amount will be 0. Okay, then what is the remaining?
So 5%.
155,000.
155,000. Okay, then on this remaining 155,000, how much is tax rate? 5%? 10%?
10%.
The next slab is 100,000. Can you recall the next slab after 300,000?
Sir, 100,000.
So can I write 155,000 here?
No, sir. 100,000 and 5%.
I cannot write. I need to write how much?
100,000.
Okay, then how much is the rate?
5%.
5%. In that case, what is the amount here?
So 5,000.
Okay. Now, what is remaining?
55,000.
Okay. Can you tell me what is the next slab?
Sir, 3 lakhs.
For next
10%.
300,000. Then for next
10%, sir.
Okay, 10%. Okay, I'm keeping it separate. Okay, in that case, how can how much I can write here? 55,000, 10%, 5,000,
500.
500. That means you can write here 10,500. Is it?
Yes,
For the
sir.
regular income, this 455,000. Okay. Okay. Keep it here. Let me review the tax slab first, then I will show you the remaining calculation for minimum tax or the implication for that. Okay, I'm just writing the slab separately here. For first 300,000, tax is 0%. For next 100,000, tax is 5%. For next 300,000, tax is 10%. Now tell me, what is the next slab?
4 lakh.
The next 4 lakh, 400,000
For 15%.
10%.
400,000, 15%. Okay, then for next
500,000.
10,000.
500,000 for 20%.
20%.
okay, next
600,000.
Residual.
residual. Is it?
Yes, sir.
Is it like this?
30. Sir, 25% এটা কি?
25%, 600,000. For next 600,000, 25%. Have you got it? I didn't get your question that what is 25%?
স্যার আমি তো জানতাম মানে 500,000 পর্যন্ত, তারপরে রেসিডুয়াল বলছিলাম আর কি। মেবি তাহলে আমাকে চেক করতে হবে একটু।
Okay.
স্যার
So
আমার
for
স্যার কনফিউজ মনে হচ্ছে স্যার, এখানে স্যার 30%টা আসবে কিনা স্যার?
okay, can anyone confirm me from the latest guideline or latest rules for tax?
স্যার 600,000 মেবি নাই, সরাসরি 25% রেসিডিয়াল করছেন আই গেস।
Okay, let's confirm it together. As it has been changed in this year, that's why I can't recall. It has been
নেক্সট
changed
স্ল্যাব হচ্ছে 34 লাখের জন্য 25%,
for next.
34 লাখের জন্য 25%,
I suspect that is there any number like 340,000?
340 লাখ।
Okay, this is here. So we have done mistake together here. It should be
রেসিডিয়াল।
residual. Okay, but previously there was 30% on residual. Okay, so systematically tax has been increased in this year, though people it is a kind of disguise that people have understood. Earlier it was kind of for residual 30%. So it has been shown by some think tanks that actual tax burden has been increased just by changing the slab, though it may be misunderstood by people in general that by increasing the minimum tax exempted income from 275,000 to 300,000, tax burden has been reduced. Okay, so there are some calculation which will make you understood about this, that whether by changing this tax slab from this year, whether actual tax burden has been reduced from people or from the Assessee, or it has remained same, or the tax burden alternatively has increased. Okay, that is part of another discussion. Okay, let's continue our problem. Okay, now how much TDS we have paid so far from this information? We have paid TDS
Yes, sir. 50,000, sir.
50,000 we have paid. Okay. Okay. Now, how much remaining income we have to be assessed? We have total income including this, right? Income from brokerage commission. We have income also from brokerage commission, but we have not calculated tax on this right now still, right? Okay. So I'm writing here for reference. Okay. Now, we have touched the first slab, we have touched the second slab, we have touched the third slab. In the third slab, do we have remaining income in this 300,000, as we have charged only for 55,000? We have used how much of this 300,000? 55,000. Out of this 300,000, how much we have used?
So 55,000, sir.
So how much is remaining in this slab?
Sir, 2,45,000.
245,000. Okay.
Yes, sir.
If we take the 10% here,
So 24,500.
24,500.
Yes, sir.
Okay. Then how much tax can be calculated so far? You see that up to this,
So 700,000 has been calculated now.
yeah, okay, I'm telling you, up to this, we have got tax liability for how much? 35,000.
35,000.
35,000.
5,000.
Okay. So still we have how much tax remaining out of this 50,000? What we already have paid? 15.
24,500.
Out of this, we have shown you the calculation. I'll explain it. We have calculated how much tax, right? Up to this 35,000.
35,000.
Okay. Now, if we subtract 35,000 from the TDS, now what is the remaining?
15,000.
15,000. Now, if we see that for how much income this 15,000 taka tax is applicable. If right now we have in this slab, we have calculated up to this. Now we are in this region. As up to this, we have got tax liability for how much? For our assessee? 35,000.
35,000.
Okay. Now, if we take 15,000 as for next previous slab, sorry, for following slab, we have the tax rate of 15%. We have tax rate of how much?
15%.
15%. So if we divide this percentage by 1.15, can I say that this 15,000 can be covered how much income?
1
1
lakh.
lakh. 100,000.
It will cover how much income? 100,000.
100,000.
Okay. Now we have got a calculation for, if we now add it, 15,000. Can we show that we have calculated tax liability 50,000 for this income, and this income?
Yes, sir.
50,000 taka can be attributed to how much amount of income? 45,000, 245,000, and 100,000.
Yes, sir.
Okay. But you see, up to this, we have covered how much amount of income? This
50,000.
45,000, up to this.
Yes, sir.
Up to this, we have covered how much amount of income? 45,000. And now, out of the remaining 1 million, with the 50,000 tax payment, we have been able to cover 245,000 and 100,000. How much?
345,000.
345,000.
5,000.
Out of this 1 million income, how much is still remaining? This amount is still remaining?
655. 655.
This amount is still remaining?
Yes, sir.
So can anyone confirm me that if I continue for calculating taxes for this amount on which we already have not calculated tax already, or we have not calculated tax yet for this amount, our regular tax will be greater or our minimum tax will be greater?
So regular will be greater, sir.
In that case, what should we do? We should stop here or we should continue calculating regular taxes for the remaining
Continue calculating.
655,000.
We should stop here, sir.
We should stop.
তো কন্টিনিউ করতে হবে না, রেগুলার তো বের করব।
We have to
Yes,
continue.
sir. We should continue, sir.
We have to
Continue,
continue.
sir.
Recall, with 15%, how much we have covered? 100,000. Of which amount? 400,000. In that case, for calculating the tax for 655,000 taka, we need to calculate tax 300,000 at the rate of 15%, then
355,
355,000 at the rate of
20%.
Have we got it?
Yes, sir.
So what we have done here, we have checked that the tax payable by the assessee in the regular, does it exceed the minimum or it is within the minimum? If it is within the minimum, in that case, we should not continue calculation. The continuation would not come here if the tax is within the minimum tax. But here we have observed that when we have compared the amount of tax applicable for the income of Mr. B, we see that the tax applicable for Mr. B will be greater than the minimum tax what he has already paid. That's why we need to pay the which tax?
Regular tax.
Regular tax. Okay. So in this way, you need to check that how minimum tax works. Okay. Always you need to check the regular tax payable and the minimum tax, and between this, which one you should pay? The greater one. Always the greater one. Okay. Then other notes I like to highlight that is related to the minimum tax is that it is obviously the greater one between the minimum tax and the regular tax, and it cannot be refunded or adjusted against the refund. And if there is any surcharge, additional surcharge or interest applicable, that will be added on the minimum tax. Let me give you an example, otherwise you will get confused in this way. Say for a person, you have got the minimum tax is greater. Okay. In that case, what will be his tax liability? Minimum tax?
Yes, sir.
Okay. Now, based on the wealth of the Mr. Assessee, you have seen that Mr. Assessee will have to pay surcharge. So in our country, there is a application of wealth surcharge that if your wealth exceeds a specific amount, let me show you the amount if I can get it available here. It has been changed in this year also. For having net wealth greater than the 2.5, here it is, surcharge. Okay. So if your net wealth means your assets over your total assets over, am I audible to you?
Yes, sir.
Net assets means your total assets over what?
Liability.
liabilities. If it is the 3 crore taka, in that case, what is your surcharge?
0.
0. Now, if you are a rich person who has net wealth greater than 3 crore, but less than 5 crore, or he has more than one motor car, or he has 8,000 square feet house property within the city corporation area. In that case, he will have to pay surcharge 10% on top of his tax liability. So say this person, Mr. Assessee, in our case, has 10 million taka as tax liability based on the situation that he is paying the minimum tax, and that is the 10 million. Just a kind of arbitrary. Okay. So in that case, what will be his final? $10 million plus 10%. How much?
11 million.
Have you got it? The point that if any surcharge, additional interest, additional amount is due, that will be based on the minimum tax. That will be based on the minimum tax when the minimum tax is the payable tax. When the minimum tax is the payable tax. Okay. So obviously, just you need to keep it in your mind that when the tax is the greater one is to be paid. And another point I just like to mention, that is when you see that your tax has been mistakenly deducted and collected in excess or deficit of the due amount. So what is the due amount? The amount to be deducted or collected in accordance with the provision of Chapter 7. Minimum tax under the section shall be computed based on the due amount of deduction or collection, and provisions of the section shall apply accordingly. Say there is in some cases you already have seen that minimum tax will be the amount which is calculated based on the TDS. Okay, we already have seen for some cases the TDS amount will be the minimum tax. In section 82C, it has been mentioned clearly, the amount of TDS what you have paid will be the minimum tax. Okay, in our earlier example, can you recall that 50,000 taka minimum tax which has been charged based on what?
TDS.
Based on the TDS. It has become now the minimum tax.
Minimum tax.
Oh, okay. Now what I like to mention that if it is such that TDS has been calculated mistakenly based on an amount which should not be the amount. Say TDS is to be calculated based on the say 10,000, but it has been calculated say based on the 11,000. Just for simplicity, consider it just a mistake that it has been calculated mistakenly based on 10,000. Sorry, based on 10,000, but it's sorry, it has been mistakenly calculated based on the 11,000, but it needs to be calculated based on the 10,000. In that case, subsequently, when it has been discovered that it has been mistakenly calculated based on the 11,000, but it should be calculated based on the 10,000, in that case, the minimum tax will be adjusted based on the due amount, what it actually be. So what should be the actual amount? between these two, the actual amount is
10,000.
10,000. Okay, so there is a scope of correcting the mistake. Okay, that is the understanding. Okay, now let's continue for today's class. That is, let me clear the canvas. In relation to the tax deducted at source, there is another tax which is known as your advance tax. Advance tax. So usually we pay taxes on the assessment in the assessment year based on the income in the income year. So you already have come to know that assessment year is followed by income year, or income year is followed by assessment year. Which one is true statement?
So assessment year is
Assessment year is followed by income year.
followed by income years.
No, sir.
Assessment year is followed by income year. Assessment year comes first, income year comes second.
No,
Sorry,
sir.
sir,
No,
sorry,
sir.
sir.
Income year
Income year is followed by
Right.
assessment year, sir.
Income year is followed by assessment year. Okay, so that is kind of very common mistake we do regardless of our age or regardless of our experience when the term clause is followed by. Still now when I see that the meeting is followed by a lunch, so I get confused whether lunch will be followed by meeting or meeting will be followed by lunch, or we'll take lunch first or attend the meeting first. So you will feel you will make it cautious that you will not do this kind of mistake. Okay, I have a scan file. Let's just open it for you. It's taking time. Okay. Regarding the advanced tax, okay, this one. So what I am mentioning that so when this is the advanced tax, you can't wait for the assessment year. It is like you are paying taxes before knowing the total taxable income of the income year. You do not know precisely that what is the amount of income you have earned or you will be earning. But before that, you are paying taxes based on some provisional estimate, based on you are supposed to do that because you have met some criteria. That's why you are supposed to do that. So that's why as you are paying a portion of taxes due in the not the a portion of taxes which will become due exactly precisely, it will become due, not it is actually due right now. It will be due after the income year, but you are paying before it is due. That's why the term is advance. That's why the term is advance taxes. Okay, now your question is, am I supposed to, or is my assessee supposed to pay advance taxes? The answer depends on some checklist. Okay, so first checklist is that if the total taxable income of your assessee or you as an assessee in the last income year exceeds 600,000 taka. How much? 600,000 taka. In which year? Last income
last
year.
income
That
year.
means it is already done. You already have paid tax for it. Okay. If it is such that in last income year of which you already have paid taxes, you had greater than 600,000 taka total taxable income. Okay. Or in the current income year, if it has been provisionally assessed that your income exceeds 600,000 taka or is going to be exceed 600,000 taka, is provisional estimation. It is not yet finished. Current one, it is not yet finished. Current income year. Any case can be applicable. Either it is either this one or this one. In that case, Assessee is supposed to pay Assessee is supposed to pay advance taxes. Assessee is supposed to pay advance tax. Okay. So now the question is, how can you compute the advance tax? Let me show you the section reference so that you will get a clue that from where we have been talking right now, or we have been talking for a few minutes. Okay. Section 65. Okay, advance payment of taxes, you already have mentioned. It has been updated for this year, that it has, you see that 600,000. Okay. Okay, it has been updated in which year? 2019. Can anyone mention it is of which act? 2019, the 10th section of the act, which act they are referring of 2019? Is it Income Tax Act?
Finance Act.
No, sir.
Thank you. It is Finance Act. Can you recall the Finance Act? We gave an idea that what is about in Finance Act, what do we do by the, okay. So it was in your, if you have the old text, you will see it is mentioned that 400,000, but now it is mentioned 600,000 because it has been updated in previous year. Okay. Now let's see that how much, how can you compute your advance tax? Okay. The amount of advance tax or the minimum payable by an assessee in a financial year shall be the amount equal to the tax payable on his income of the latest income year as assessed on regular basis or provisionally, as the case may be, as reduced by the amount of tax required to be deducted or collected at source in accordance with the previous preceding provisions of this year. Okay. So it is, the thing is like that, if your income in latest income year, if your income in latest income year, which is currently undergoing, you have provisionally estimated that you will have, when it will be finished, you will have approximately say 10 million taxable income. Okay. Now you have applied the slabs. Can you recall the slabs? 300,000, 100,000, 400,000, 500,000. Is it like that? Can you recall?
Yes, sir.
Okay. So you have calculated based on that. Based on your calculation, say you have got that your tax liability seems to be around 100,000. I'm just giving you an idea that 100,000. So your advance tax will be equal to 100,000 minus an approximate amount which will be charged from you in the name of TDS. Have you got it?
Yes, sir.
Say we always include the income before taxes in the taxable income. Which income you include in the taxable when you take the income for calculation of taxes? Which income you need to include here? The before tax income or after tax income?
So before tax income.
You have to include the before tax income. Okay, so based on that you have calculated approximately how much tax you may supposed to pay. 100,000.
100,000.
So you know that for every month you will be charged TDS by your employer or by your by the person from whom you are receiving income, or by any authority who is responsible. So you have an idea that how much may be charged from me in the name of TDS. So say it is kind of say 30,000. Okay, in that case, what is the approximate amount of advance tax you are supposed to pay?
70,000.
70,000. It has been mentioned here. Okay. So it is not likely that you have to pay the 70,000 at once to the tax authority. Tax authority has given you the flexibility that you can pay the you can pay the advance tax in some equal installment, say on the 15th day of each of this month: September, December, March, June. Does it look like a quarterly payment?
Yes, sir.
Okay. Now, so if it is like that, your Deputy Commissioner of Taxes may allow you some flexibility regarding payment of advance taxes. He may extend your due date of paying advance taxes. So the criteria is like that. If I just like to show you the flow chart, which will be very convenient for you to participate in the discussion. That is like this. Okay. Say, let's begin from the old taxpayer who is continuously paying taxes for several years, who has been paying. Okay. So if the latest assessed income, that means you already have paid taxes on this, right? Latest income year or the previous income year on which you already have paid taxes and you already have assessed that income. And that is assessed by the tax authority, and it has exceeded 600,000. And say it was for the case 20, which is already closed, say 2019-20 assessment year. So in this 2019-20 assessment year, your assessed income was 600,000. In that case, you are not supposed to pay the advance tax. But if it exceeds 600,000, in that case, you are supposed to pay advance tax in the following assessment year. Is it the following assessment year? 2020-21?
Yes,
So
sir.
you see, you have satisfied the criteria based on your taxable income in the previous or in the latest income year and the respective assessment year. Okay, So it must exceed the 600,000 taka. Let's stick to the old taxpayer, right, for the time being. Okay. So if the answer is no, that your income has not exceeded 600,000 taka. Remember, it is the taxable income. It is the taxable income. I mean, after adjusting for all exemption, after adjusting for all allowances, okay, taxable income. So if it is not, if it didn't exceed the 600,000, okay, in that case, you have been exempted from the payment of advance taxes. That means you are not supposed to pay any advance tax. Okay. However, if the answer is yes, in that case, you need to pay advance tax. You need to pay advance tax. Now, the question is how you will calculate your tax, advance tax. Your advance tax can be calculated based on your last assessment income. You have calculated, say, say you have paid taxes approximately, say, 50,000 taka, and in this year you are thinking that 10,000 taka will be charged by the TDS. In that case, in this year, advance tax is to be paid approximately 40,000 taka. So tax paid on the basis of last assessed income minus TDS, if any. So sometimes if you have some income on which TDS is not applicable, in that case, it may appear zero, this amount. In that case, how much you need to pay as advance tax? The amount of tax which you calculated based on the assessment, in the previous year, or based on the assessment of the last year. Okay. Now, the following issue. If it is such that after when the 2019-20 income year has been closed, now you know how much you need to pay or how much tax is actually due for 2021 assessment year, right? When it is closed, you have a full picture.
Yes, sir.
For the tax to be paid in this assessment year. Okay. Say you already have paid taxes in the form of advance tax, in the form of tax deducted at source, right? Okay. Say you have paid 100,000 taka in total. Okay. Based on your some estimation of income, say 10 million. Okay. It is, you already have paid this advance tax and TDS, and in total you have paid how much? 100,000. Based on your approximation of the income you will be earning in this income year, and which will be assessed in this assessment year. Okay. So when it is closed, this income year is closed, your total picture is before your eyes, that how much you have earned income as taxable income. Okay. Now it is seen that you have earned 11 million income, and based on the tax calculation, it has been observed that your tax payable is 150,000. How much? 150,000. Okay. Can you say that the amount of tax what you have paid in the form of advance tax and also in the form of TDS, the total 100,000 is how much percentage of this 150,000? How much?
So 67%.
67%. If in that case, just try to understand that in this case, you have paid less than the due or you have paid more than the due?
So less.
Less than the due. Okay. If it is such that the amount of taxes what has been paid is less than the 75% of the due amount, less than the 75% of the due amount. What is the due amount? 150,000. What is 75,000 of 150,000? Can anyone confirm calculation? What is the 75% of 150,000? What is the 75% of 150,000?
1,12,500.
112,500. You see the amount what has been paid is less than this? Less
Yes,
than
sir.
this? Okay. In that case, you will be penalized by the tax authority. You will be penalized.
Next.
Why? Because you have paid advance taxes, you have paid total taxes which is below 75% of the due taxes. Have you got it? Have you got it? How can you check it?
Yes, sir.
It is less than 75%. It is not necessarily it is less than 150,000. It may be less than, but if it is less than 75% of 150,000, in that case, you will be penalized. Now the question is, how much is penalty? The penalty is 10% interest, 10% simple interest. Assessee will pay the unpaid amount of tax plus simple interest at the rate of 10% if such amount falls short than 75% of the assessed taxes. Okay. Now, how much is unpaid right now out of 150,000?
12,500.
Okay. Now, if it is paid after 4 months due, there will be a calculation. I'm not showing that calculation, but remember that 10% penalty will be added on the unpaid amount. And why this 10% additional has been added now? Because it is below than 75% of the due amount. Have you got it? Now, let me show you an interesting case. If it is such that you have paid 160,000 in the form of advance tax and also in the form of TDS. Okay, you have paid advance tax. In that case, government will pay you penalty. Government will pay you. It is not a penalty. The wording is wrong. Government will pay you some compensation for excess payment of advance tax. For excess payment of advance tax. Okay. So based on the regular assessment, the due amount is say the due amount for paying advance tax say 120,000, but you have paid 160,000 as advance tax. In that case, government will pay you interest based on additional 40,000. Say finally you are also supposed to pay 120,000 as advance tax. So in that case, for the excess payment of 40,000, you will get interest as compensation from the government. Okay, that has been.
So what is the percentage?
The percentage is 10%. The percentage is 10%. Okay. So I think you have got it. Now let's look at if the person is new taxpayer. If the person is new taxpayer and his present income likely to exceed, so how you can get the likely to exceed? So say you have joined in a job in December, say November 2020, a fresher. So you are thinking that what will be my income, taxable income, if I continue this job? So you are making some provisional estimate. You are making some provisional estimate. You know the provisional term, that it is not final, it is not confirmed. This kind of some preliminary assessment. Okay. So based on that, you have got that you are likely to have taxable income more than 600,000. In that case, advanced tax regulation will become applicable for you if it exceeds taka 600,000. Okay. Other things are remaining same, like the previous case, but what is the difference? Difference is that in case of old taxpayer, we are looking at the taxable income of the assessee in the last or the last assessed income year, or the income in the last assessment year. And in case of new taxpayer, instead of, as we do not have any past data, the taxpayer needs to assess that, make a provisional estimate that how much income I'm likely to generate in this income year. Okay, so we have a illustration in your text. You can apply your learning to clear that illustration, and you can also look at some problem available in exercise to make your concept clear. Okay, so we will conclude today's session just by giving you a high level summary regarding return of income. So I think you already have got an idea that return of income is mandatory. It has been made mandatory, that submission is mandatory. You need to prepare the income tax return and you need to submit the income tax return. So earlier it was mentioned that if your income exceeds, if your taxable income, in fact, if your taxable income exceeds the tax exempted income in any of the last three assessment year. Right now you are here. Okay, right now you are here, but in last 3 income year, if it happens that your income exceeds any of these 3 previous assessment year, your income exceeds the tax exempted limit, in that case you are supposed to submit your income tax return. Or if it is not the case, say you are a fresher in the tax jurisdiction, in that case you have no past. If it is like that, your income in this assessment, in this current income year, your income has exceeded the minimum tax exempted or the tax exempted limit, in that case, you are supposed to submit the income tax return. Okay. But from this income year, in current financial year, it has been made mandatory that regardless of your income level, regardless of your past history, if it is like that, you have somehow TIN number you have, for any reason you have collected, in that case you will be supposed to submit the income tax return. But there has been made some exemption, a very special case. Say you are a foreigner, you have been in Bangladesh and you have taken TIN number for opening bank account. In that case, you are not supposed to, you are a foreigner, you are not supposed to submit the income tax return. Or say you have taken in TIN number only for purpose of taking the credit card. In that case, you are not supposed to submit the income tax return. Or if it is like that, you have taken TIN number only for getting listed in the people from whom government will acquire the property. Or very special case I probably have mentioned in the classroom post. In that case, the you are not supposed to submit the income tax return. But the thing which has been very crucial in this financial is that if anyhow you have taken the TIN number, can you recall, can anyone recall how many people do we have right now who have taken the TIN number?
Sir, 48 million.
48 million.
48 million. Okay. But in the next year, you will see the growth of this number. I mean that how many new TIN holders have been added in this year will not be very satisfactory amount because of this clause. Because of addition to this clause, as it has been mandatory for submission of income tax return for holding the TIN number, you will see in the next year that the new addition of the TIN holders will be very lower than the expected. Okay, so I already have mentioned it, right? Okay, so these are the some things you need to that why you are supposed to submit the income tax return if any condition is satisfied by you. And you see, I already have mentioned that when you are exempted from submitting your income tax return, you're a foreigner, you have no fixed base here, or you have taken 12-digit TIN number only for selling land, but you have no taxable income. Okay, or you have taken TIN number only for taking credit card. Okay, and I also showed to you that from where the tax return forms are available. Can you recall that I showed you where these forms are available?
Yes, sir.
Okay, so what is the deadline for submitting individual income tax return?
30th November.
30 November 2020. Is it already, it has already been overdue if there has been no extension? If anyone wants to submit the income tax return right now, I'm assuming that there has been no extension. In that case, it will become overdue. Okay, the final due date is 30 November 2020. Okay, can anyone share that in this month, one particular date and one particular day has been observed as a VAT day? Can anyone mention what was in which date VAT day was mentioned? VAT day was observed in this month.
Sir, 10th December.
Thank you. So 10 December is the VAT day, and 30 November has been recognized now 30 November 2020 now. Which day? 30 November is now observed as which day?
Tax day.
30 November is now observed as tax day.
Tax day.
Okay. There has been separate days for custom day, and there has also been separate day for VAT day. You already have mentioned, but I'm not mentioning the custom day. It is 25th or 24th of November or December. I can't recall right now. You will check it. I will ask you later that which day is observed as a custom day. Okay. Now you will see the consequence of not submitting the income tax return. You will have to pay. You will have to pay penalty as interest payment, and the chapters regarding the income tax return is available in your text. You will see that which chapter is for income tax return, and you will see those particulars. The particulars what have been mentioned here have been translated there, okay, or have been showed there. And there are two methods of submitting income tax return. One is known as universal method. Another one is known as here. I need to show you. Okay. One is universal method. Okay. Let me show you from the income tax return form. You see the form here and the income tax. Okay, this is the cover page. Okay. Return submitted under section 82 double B. So if it is yes, that means you are submitting income tax or you are preparing income tax return following the method of universal method. Otherwise, you're not following. Okay. So now what is the implication of this method? The implication method is that you will prepare tax return by yourself, and you will not be questioned, and tax authority will not determine your will not prepare your tax return. However, if the answer is no, in that case, tax officer will determine that how much tax you need to pay. And here, when you will prepare your income tax return using this 82 double B, you when you will be given a acceptance letter that we have received your income tax return, that will be considered as that assessment order. That means your assessment is done. Your assessment is done. And if it is such that you have done some mistake in that, or there has been some discrepancy between the due amount and the amount what you have paid, in that case, if it is informed to the deputy tax commissioner, he or she will take measures to rectify those mistakes. Okay. So usually what we follow in general, that is that we follow the 82 double B, that we prepare income tax return by ourselves or by taking help from the experts. But the difference is that when you are preparing your income tax return in general method, that is not 82 double B or the universal method, in that case, just recognize the difference. Your acknowledgement letter after submitting income tax return will not be considered as assessment order. That means it is not finalized that your assessment has been done. So in that case, you need to wait. You need to wait for what? You need to wait for the hearing from whom? You need to wait for the hearing from the deputy tax commissioner, and he or she will call you and we'll check your documents and evidence, and if he is or she is satisfied that everything is okay, in that case he will give you the assessment order, or he will give the instruction to share the assessment order. Okay, now it is the cover page. Can you read this IT 11 Go 2016 or 2016? It is the cover page. For whom? For everyone, for every individual taxpayer. Which one? This one. You see, IT means income tax. 11 Go means there are some numbers, is a kind of for indexing, not for a special. There has been a special meaning. Okay, so it has been introduced in 2016. That's why 2016 has been added here. Okay, I probably have showed to you that what I did or what I wrote when I prepared my income tax return, and you have already been familiar with some of these particulars already. Okay, so it is a kind of cover page. So based in addition to this cover page, what you need to do, you need to provide some attachment. I'm just concluding today's session just by asking one question, that which attachment I need to add if I have only income from salary. Which attachment? What is the attachment name?
Schedule 24A.
Okay, thank you. I'm closing the session.